Welcome to this explainer. In our previous deep dives, we've explored the foundational concepts of money, banks, credit, and wealth. We all use money literally every single day. We earn it, we spend it, we save it. But today, we are going much deeper. Because simply understanding what money is, well, that's just one piece of the puzzle. Understanding the reality of who actually controls it is an entirely different story. We're moving way beyond the surface of your bank account to investigate the true architects of global finance.
Take a second and really think about that question. Who actually controls the money? When you buy a coffee or take out a mortgage or read about shifting global markets, whose hand is really on the wheel? It's a question that challenges our basic assumptions about the reality we live in, and answering it requires us to pull back the curtain on an incredibly complex system.
Section 1. The illusion of control. To start our investigation, we have to completely shift our perspective away from individual wealth. In the realm of global finance, controlling money absolutely does not mean owning every single dollar in a giant vault. It means something much more subtle, and honestly, much more powerful. It means influencing. It's the ability to expand or contract the total money supply, to set benchmark interest rates, to direct the flow of credit, and to manage vast financial clearing systems. When you hold these levers, your decisions dictate market liquidity on a massive macro scale, influencing the cost of living and the viability of entire global industries. Influence is the true metric of power here.
Section 2. Meet the system managers.
If influence is power, we need to look at the centralized institutions tasked with managing this massive global architecture. Most countries operate under the guidance of central banks, heavyweights like the Federal Reserve in the US, the European Central Bank, and various reserve systems globally. Now, their primary job is not to interact with everyday customers like us. Instead, they act as the banks for the banks. By expanding or shrinking their own massive balance sheets through mechanisms like quantitative easing, they act as the ultimate overseers of the rules of the game, dictating exactly how much liquidity exists in the world. And by acting as the lenders of last resort, they serve as the ultimate backstop, ensuring the engine of global finance doesn't just stall out.
Section 3. How the money moves.
So how do these central managers actually exert their influence? Well, look at the sharp contrast in outcomes born from a single policy decision. Central banks use benchmark interest rates to steer the economic ship. When they lower rates, borrowing costs drop. The result? Cheap capital floods the market, businesses leverage up for expansion, and the economy accelerates. On the flip side, when they hike rates, borrowing gets expensive fast, effectively choking off liquidity. This single, centralized lever ripples out to dictate corporate capital allocation and consumer behavior all across the globe. But central banks don't hand you a mortgage, right? That's where commercial banks step in as the vital next layer. They take the parameters set by the central managers and pump that liquidity into the real world. But here's the wild part. They aren't just moving existing money around. Through the fractional reserve banking system, every single loan they issue essentially creates new money in the economy. When a commercial bank issues a loan, it credits an account out of thin air, dynamically expanding the money supply. They are the active arteries delivering the lifeblood of credit and financial products straight to consumers and corporations. Section 4. The weight of debt. Okay, so we have the central managers and the commercial distributors, but there is another massive player on the board: governments. Modern economies are deeply, unavoidably connected to debt. Notice the sheer scale of the figures we're looking at here, with sovereign debt frequently reaching into the tens of trillions of dollars. Debt isn't just a byproduct of the system. Sovereign debt is the heavy foundation of the modern state. Government bonds are treated as the ultimate safe haven assets, anchoring global portfolios. And this constant cycle of governments issuing these bonds and funneling trillions into infrastructure and deficit spending fundamentally shapes the value and availability of money for everyone else. Because of these massive, overlapping forces, central bank easing, commercial credit expansion, and deficit government spending, money is never static. It fundamentally transforms over time, and the most visible way we see this is through inflation. Step 1, too much money enters the system, expanding faster than actual economic output. Step 2, inflation rises. And Step 3, purchasing power changes, ultimately leading to the debasement of the currency. Inflation effectively functions as an invisible tax on savers, quietly reallocating purchasing power. The dollar in your pocket today is drastically different than it was a decade ago, dictated entirely by these macroeconomic forces operating far above us.
Section 5. The power of trust.
But beneath all the heavy machinery of the financial system lies a truly shocking psychological reality. Money only works because people trust it. I want you to just let that sink in. For all the complex monetary policy, quantitative easing, and massive government bonds, the foundational bedrock of global finance is simply human confidence. History shows us over and over that whether it's a sudden bank run seen during the Great Depression or hyperinflation episodes in modern history, the math doesn't matter if belief wavers. If collective trust disappears, the entire architecture becomes dangerously unstable.
Section 6. The invisible web. When we weave all these threads together, the true picture finally emerges. To answer our initial question of who controls the money, we have to dispel a very popular myth. There is no lone puppet master. There is no single person in a dark room pulling the strings of global finance. Reality is far more complex and fascinating. We are looking at a deeply interconnected organism, a web of competing systems, overlapping institutions, and global markets that collectively govern the flow. Every single gear in this machine depends on the others.
Ultimately, we have to completely redefine our understanding of what money truly is. It's not just paper in a wallet or digits on a screen. Money is influence. It is trust. It is an intricate global system built entirely on structural control and collective belief. Grasping this interconnected reality fundamentally changes how you view every transaction, every interest rate hike, and every single news headline. The true architects of our global finance don't operate through sheer force. They operate through the quiet mechanisms of influence, policy, and confidence. Because true power is often completely invisible. Once you understand the mechanics of influence, trust, and debt that surround us, you just can't look at the economy the same way. So, my final question to you is, how will you look at the world differently now? Thank you for joining me for this explainer. Keep questioning the structures around you, and keep seeking to understand the vital systems shaping our modern world.
This is CorpFile, inside the world of big brands. Subscribe to explore the real stories behind the companies that shape our world.